So Mark, big changes for first-time home buyers, and I keep hearing a name, Bill Pulte, come up in different conversations. What's going on here?
So Bill Pulte took over the Federal Housing Finance Agency.
That's a mouthful.
It is a mouthful, right? And they are over Fannie Mae and Freddie Mac. And so now this guy, you may recognize the name Pulte. Pulte is a builder, and now they do about $17.9 billion, not that I looked that up, in sales a year. I mean, it's a big company. And it was started by his grandfather.
Okay.
And he doesn't actually run the company or have anything to do with it. His money has been made in buying and selling air conditioning companies, believe it or not.
Okay.
And he's worth about $100 million. And he has a finance background, and he seems like a pretty good guy for the job.
Right.
But he's come in and he's discovered some things. Right now the focus is on efficiency and inefficiency specifically with some of these organizations. And there is a now famous YouTube video out there of Bill Pulte walking around Fannie Mae, where there's supposed to be 2,900 people working there, and 49 people showed up for work.
Wow.
And
attendance is low.
Attendance is low. And most of them seem to be, like the cafeteria workers who are making food for the people that aren't showing up for work. And it doesn't make a whole lot of sense. As Fannie's spending $57 million a year, renting office space and no one's showing up, that's a problem.
Right. Sure.
But he's also come in and made some other changes along the way. He's gotten rid of the board of both Fannie Mae and Freddie Mac.
Okay.
And changed, he made himself chairman of the board of both of them, which, seems like it might not be a bad idea because, looking at these agencies, and to say there's government waste out there, I don't think we're surprising anybody.
Right. Yeah, I don't think anybody's surprised by that.
No, nobody's surprised by that. And so the fact that this guy walked in and he's, like thinking, gosh, maybe we need to change things up a little bit, he's probably not wrong.
Yeah, I would say so. And so specifically for first-time home buyers, I know we're going to get into the some of the changes that the FHA has made in regards to immigration and stuff, but specifically for first-time home buyers, what has Bill done that has changed the landscape or that you've seen in the mortgage world?
So one of the things that was out there was they call it a special credit finance program, and so it's if you're a first-time home buyer and you're under a certain income limit, you would qualify for Home Ready or Home Possible, the Fannie Mae, Freddie Mac products. So basically, 3% down on the conventional loan, lower mortgage insurance, and a lower interest rate.
Yeah.
And then Fannie Mae came out with a grant program that gives them $3,000 or $5,000 basically for free. There's no requirement. You don't have to live there a certain period of time. You don't have to, if you sell the house 6 months later, you're okay. And this program was based on kind of where you lived and where you were moving to.
Right.
But the income limit, whereas, some of these programs, it's like $75,000 a year. It's $133,000. So it helped a lot of first-time home buyers, and they killed that program.
Okay.
That's no longer out there. If you want some sort of help with your down payment or what, now you got to look to the state agencies, the typical, here, we call them, TSHAC or TDHCA here in Texas. And, they help out with down payment assistance, but it comes at a higher interest rate, or there's a restriction on how long you have to be in a loan, or, something like that.
Yeah, so those down payment assistance programs that were effectively no strings attached, here's $5,000 as long as you make under 133 grand, that's gone. Now you can still get the DPA as far as I'm aware. It's just a little bit of a different process now. Are you still doing a lot of DPA stuff, or are you seeing any changes here?
We are doing a decent amount, and traditionally, I'll just tell you, lenders, it's not their favorite thing.
Yeah.
It's not a huge moneymaker. But, in our group, we kind of had the attitude like, we want to do their first home loan.
Right.
Because we want to do their second home loan and the third. And, and to the point when they're retiring and all their kids have moved out of the house and they want to buy that next house, downsize, leave no forwarding address, their kids can't find them. Like that, we want to do that loan too.
Yeah.
And so, but if you don't do the first loan, it's real hard to do the second and the third.
Yeah.
And sometimes that's a down payment assistance loan. and it is what it is. And if you've got the long range plan in mind,
Yeah.
it just sort of makes sense.
It does. And speaking to people specifically who are in our industry, real estate and then, mortgage loans, I always coach my agents on the team that the first transaction you do with somebody will always be your least profitable transaction. And it's no different than think of like a luxury hotel in Cabo, right? If you're going to go down there and vacation, they've probably hit you with about $400 or $500 worth of targeted social media ads and television commercials and stuff like that. You go down there and have the time of your life. You don't need to see an ad again to go back. Every year, you're going to take your family back down there on vacation.
Right.
Our industry is that way. And so we have our relationship with Zillow, and, Zillow provides a lot of leads for us, and we take we pay them a referral fee rather. But that's a client that you get, and if you nurture them properly, they become your client for life. And this is why I wanted to talk about this specifically, with the new first time home buyer programs and what's happened with the FHA. All I'm seeing in the real estate news feed, because I'm plugged into that on social media, I think probably 80% of the people I follow are agents. So, everybody's talking, and this is Houston, Texas. I think it's important for people to know where we are located if they couldn't tell from the Astros shirt. But, we have a lot of Hispanic population here. And so everybody, especially the bilingual agents that I'm friends with, are talking about the FHA restrictions now not allowing undocumented immigrants and people without green card and or citizenship status to use an FHA loan. Now, explain that a little bit, because I'm hearing that they can get a conventional loan still, but not FHA, and who all is excluded?
So, first of all, we're talking about undocumented immigrants that came to the United States that don't have a green card.
Right.
They don't have a visa to be here. We talked about that earlier today about, if you're on a work visa or something like that, okay, you're foreign, you can buy a house, no problem. And there's other programs out there that will do undocumented immigrant loans.
Right.
But it's sort of comes down to common sense. So let's say you've got $300,000 laying around and somebody comes to you, they want to borrow that $300,000 to buy a house, but they're not a documented immigrant. They don't have any, there's no legal saying they can be in the United States. They're just here.
Yeah.
That person could, I don't know, get deported.
Right, sure.
So let's say that you loan them $300,000 to buy their house, and then a year later, they end up getting deported, or they end up going back to their home country. Maybe they didn't like it here, right?
Yeah,
it doesn't have to be deported.
Which I'm seeing a lot of people do that now.
Right. They went back to wherever they came from, and that's totally fine. But the problem is that how likely are they to make payments on your $300,000 loan if they're not living in the house anymore?
Very unlikely. The probability is probably approaching zero.
And what recourse do you have? I mean, are you going to go after this person?
No, not in a foreign country.
Yeah, you go search them down in a foreign country and do what? So now you've got to foreclose on the property, which is a very expensive and costly and time-consuming in Texas process.
Yeah.
It sort of didn't make sense to spend taxpayer dollars, lending this money.
Right.
If there was a pretty good chance if something happened. Now, some of them went fantastically. I mean, the delinquency rates on FHA loans are not super high in the first place. But you could see maybe how this could end up being. And we're not dancing around the issue here.
No, it's a real issue. And regardless of where you sit politically, I think you have to understand the notion that if, now that Trump is in office, whether you're happy with the policy or unhappy with the policy, the likelihood of an illegal immigrant being deported is higher than it was in years prior to Trump's second administration. So if you're a lender and you're lending, I mean, we're talking about real money here, hundreds of thousands of dollars. If you're lending that money and the likelihood of the person that you're lending the money to having to leave or being forced to leave this country goes up exponentially, then the risk also goes up exponentially. And that's something that we can discuss regardless of what your thoughts are on it. The risk tolerance for these lenders has to be, the appetite has to be high for them to lend the money. And the FHA is a federal program.
Right.
And so effectively the FHA was lending people that were not documented to be in this country taxpayer money, and that's causing a problem now, and it's coming to an end.
Essentially, and I mean, it's not exactly taxpayer money that they're lending, but
Right.
yes, the program is administered by the government, and certainly there's money spent to do this. And, in lending, when people, I'm talking to them about their credit, or, I often liken it to, hey, would you lend your friend $20? If you've got your friend, they don't have a job, like, they live on their mom's couch, they haven't paid you back the last 3 times, all of that. I mean, it's all consideration of like, would you lend this money yourself?
Yeah.
As opposed to the guy that, man, he shows up 5 minutes early every time, he's lived in the same house for 10 years, he's got a bunch of money in the bank, all that, right? So you're looking at those things.
Yeah.
And another layer of risk is undocumented individuals who are not legally here.
Yeah.
And it just adds to that whole equation of like, is this a good credit risk or not?
Yeah.
Unfortunately.
Yeah, and that is unfortunate for those that were looking to buy, that were DACA recipients, for example, because, DACA recipients are here through no fault of their own. I have a lot of friends that are DACA recipients, and they were brought here by their parents, albeit illegally. They were brought here at 2 years old. I have a 2-year-old. He goes where I say he's going to go. So,
Right.
if I take him
Yeah.
across the border, he's going there as well. So, you feel for those people, and you wish that there was, a way that they could, become homeowners and achieve that American dream.
Yeah.
However, I also understand that, if we're lending money to people that are going to be deported, we can't have a huge default rate, because that has bigger implications for the economy as a whole. I mean, do I have that basically right?
Yeah, and I mean, there's a point here that that kind of, not a lot of people are talking about, but I've thought a lot about this. Now, I'm a kid from, upper middle class, northeastern Ohio.
Yeah.
Not a lot of people immigrate to Chagrin Falls, Ohio. Just saying. And pretty much everybody, looks like me. That's just the way it was. Now, in Houston, it's a little different.
Yeah.
Right?
Most of our city in the country.
Right. And a lot of other cities in the country, they're like that. And so, people are they want to get to the United States, to have the American dream and everything else. And I'm wondering, is the solution not to deport a bunch of people? Is the solution to try to make the process to become a citizen easier?
Well, I think it's a great point. And I think you have to parcel it out case by case, which is going to take a very long period of time.
It's a big problem.
It's a big process. It's a big problem. And, should people who are causing issues and committing crimes that are here undocumented be allowed to stay? Absolutely not. Should my buddy, who's a DACA recipient that's been here since he was 2 years old, speaks English better than he does Spanish, pays taxes, and never gets in trouble, be allowed to stay here? He absolutely should. Should he be allowed to achieve the American dream and buy a house? Absolutely. So it's a tough issue, and it's one that I think we have to talk about openly and honestly, and from a moral perspective, and from, we talk about houses on this show. What is the housing implication? Because if we are going to deport all the DACA recipients, if we are going to deport all of the people that are here that are abiding by the laws and doing things the right way, we can't really lend them money, because then we're going to have a huge default rate, and then we're going to have a whole different type of housing crisis on our hands that we can't afford as a country, quite
certainly
frankly.
could. And while we're hugging porcupines with our subjects here, we might as well talk about UDAP.
Yeah.
Is back to Mr. Pulte. One of the other things that he did, and it's getting a lot of press too, is he rolled back UDAP.
For those of us that aren't as smart as your average home loan.
I mean, honestly, I heard UDAP. I thought it was, something new the kids say. I don't know.
Yeah, sounds like it.
Yeah, sounds like it. But it's actually the Unfair and Deceptive Acts or Practices Act. So this sounds really bad. Like, let's get rid of the regulations that keep unfair and deceptive practices from happening.
So the unfair and the deceptive of the world.
So we're gonna be unfair and deceptive too. And it's
as if our industry needs any more clout like that.
Exactly.
Like, people already think we're unfair and deceptive. As
you get a realtor and a mortgage guy and a car salesman and insurance salesman together. I mean,
Yeah, we're
Yeah.
a used car salesman away on this podcast from being
Yeah.
the trifecta here.
I mean, the reality is, unfortunately, that's how they, that's how they view our
Yeah.
industry, and some of that we've earned. I mean, not,
Quite frankly,
certainly a lot of the population in our industry has given us a bad name over the years, and this was the unfair and deceptive acts or practices. I mean, all of that was put in place for good reason.
Yeah.
But the reality is that when you take that away, there's 7 other regulatory agencies that are governing the same things.
Yeah.
If it's not, the CFPB, and okay, well, the CFPB is not as strong as they were, but you know what? I mean, we're still audited by the state agencies. We're still Federal Trade Commission, and like there's all these different agencies that regulate the mortgage world, especially. And then, I mean, you agents, I mean, it's like the Wild West, right?
Yeah, we kind of, well, I mean, I don't know if you heard about the bar settlement that happened, last year. It was kind of a little blip in the news, but.
Right, little blip in the news. But the reality is, I mean, there's so many other, and so a lot of what's going on is they're realizing like there's duplication in a lot of these things. And so unfortunately, it's necessary to make some changes to move forward. Yeah. And, often sometimes people, these regulations, they hamper the process.
Yeah. So you think
and they contradict each other too.
That cutting the UDAP, even though it sounds like, hey, we're allowing more unfair and deceptive practices, really is not going to allow for very much unfair and deceptive practice because of the duplication in the regulation and the bodies that regulate lenders and agents.
Well, in these days, when that was put in place, I mean, there wasn't as much technology and all that. When you apply for a mortgage loan today, they're running all kinds of fraud guards, and they find out, do you own a business? Do you own other property? Is there some income we don't know about? Are there debts that we don't know about? I mean, they are much more thorough than they were when those were put in place years ago. And rightfully so. I mean, honestly, because I hate to say it was like the Wild West, but I mean, 20 years ago, it was a whole different world. Yeah. And all that was absolutely necessary.
Well, and I want to touch one more time on the loan situation with the FHA. So let's say, because we very well may have somebody watching this podcast who now is not eligible for an FHA loan.
Right.
Are there other, like, what about conventional mortgages? What about bank statement mortgages, DSCR? Like, is there a way, if there's a DACA recipient that happens to click on this video and, wants to hear about how they can buy a home, is there a way they can do that still in today's climate? Guys, before we wrap up this conversation, we noticed something concerning. Most of you that watched our videos are actually not subscribed to the channel.
What's up with that?
Guys, if you're getting value out of these conversations, it does not cost you anything to slap that subscribe button and leave a thumbs up on this video and maybe even a comment. Thanks so much, and let's continue the chat.
We do, there are other programs out there that are available. There's lenders, I mean, and that's been that way for decades. Yeah. There's certainly, I remember, 20 years ago, I had a bank, there was some bank in the city who, that's what they did. It was like 35% down or something. Yeah. Back then. It's a lot less now. But, point is that they would lend to, pretty much anybody. Yeah. And so, that market has always been there. But FHA is saying, hey, we're not going to do this anymore. Yeah.
So just no FHA, but so the short answer, I guess, is no FHA, but there are other alternatives that are out there for you if you're not documented.
They're not 3.5% down.
No, and I would assume the interest rate's much higher.
And back to the kind of how we think, or credit risk, right? 3.5% down for somebody who may self-deport, as you said. Yeah, probably didn't make a whole lot of sense anyway. Now, if you got 20% into the game, okay, now you got some real, you got some skin in the game, as they say, right? So you might think twice about moving out of the country, or you might sell that house. Yeah. And then it's not the mortgage company's problem anymore.
I wonder, if it will create a lot of foreign landlords, because, if you've got somebody who is at risk of deportation and they want to self-deport before they actually are physically made to leave, and they have a home and they don't necessarily want or are in a position to sell it right now, but they go back to, let's say, Mexico or somewhere in South America or somewhere in the Caribbean for that matter, and just decide, hey, I'm going to rent it out. I could see a situation where there's actually quite a few foreign landlords with rentals that are hitting the market.
And we shouldn't just say, it's Mexico, South. I mean, they could come from Canada.
Yeah.
They could come from, I don't know, China or Japan, Germany or wherever. I mean, there's so much focus on, it's the Hispanic culture, and that's not necessarily always the case.
Well, I think I say that because we're in Texas,
right?
So it's a Texas thing. I mean,
that is a
when you talk
thing
about the immigrants here, we're talking mostly Mexico and Central America.
Yeah.
But it's different in all other parts of the country. Yeah. But as far as Mr. Pulte is concerned, what does all this mean? Is this a good thing? Is this a bad thing? Is it TBD? What are your thoughts?
I think it's a good thing. I mean, a lot of what's going on is they're bringing business people into these agencies, and they're saying, wait a minute, I mean, you ever been to the DMV?
Yeah, a few times, unfortunately.
Are they really efficient?
I think they're the antithesis of efficiency.
Exactly. And it's, and if you had somebody come in there, a businessman, who, I mean, they would drive half my friends nuts.
Yeah.
Who are business owners. You'd be like, oh my gosh, how do you guys do this all day?
Yeah.
Like I would shoot myself working here.
Yeah.
And that, unfortunately, a lot of the government agents, and to be fair, some private industry too.
Yeah.
There's a lot of people, that maybe they've been there for 20 years, and it's kind of like, in Office Space, what exactly do you do here? What would you say you do here? And that's those questions are starting to get asked. I don't think that's a bad thing.
Yeah.
I think some of that needed to be examined, looked at, and revamped.